there's a lot of people that have probably got a bit of a whack on the side of the head with their investments, depending on how they're holding it. We've seen the market, fall through the clouds and kind of rebound.
Mm.
I think there's certainly some doubt out there whether this rebound is just a rebound and they're going to crash again. But
Yep.
once all of that is over, what are some of the positive trends that you see from an investor's perspective across property, across listed, across unlisted? Are there some golden nuggets that the rest of us have missed that you can share?
No, I don't. I mean, I don't think that it's about what's been missed. I think it'll just be that, like always in these situations, who's willing to take risk at the right time in the cycle. Because I think all of those areas we kind of touched on earlier that people are really interested in, anything to do with AI, anything to do with fintech has been super popular. Take fintech as an example. There's a number of players in that space that have been affected by COVID and changed their plans to, IPO and different things, even in Australia. But I think, post a recovery, the fundamental demands for why those companies have appeared are still there. So I think that there'll still be a lot of interest around that. And I've been on a few investor forums, kind of showcases online over the last month, because the old roadshow or, event at a convention centre has turned into an online platform as well. And certainly the most interest was still in those spaces from the emerging sectors. So if you're talking kind of seed and Series A stuff, I think there's still a heap of interest out of that space. And that's not just in Australia. I know, I've spent the last 4 years in Singapore. I know the same applied there. If it was kind of fintech, medtech, AI, any kind of focus in that area was rightly or wrongly hot. And I don't think there was a lot of due diligence in the interest. It was just that people wanted to be in that space. So I think things like that will continue. I think as far as what's happened to the market, people want to be liquid at this time. So I think listed vehicles are still attractive for people to invest in because they offer liquidity. I think for private vehicles, whether kind of agnostic to sector, I think people trying to raise money in private vehicles at the moment can be more difficult because people can't see that they can control an exit or understand, the commercialisation of an investment. So I'm seeing that a fair bit. So I know with some of our own stuff, we're looking at how we can do more things in listed vehicles or, IPO, RPO, that type of thing around mining. So, I think it's a really interesting time. I mean, the first thing we were hearing was the big investors, the family offices and things were all, wanting to turn to cash and hold. But I think there's a fair bit of appetite now from people like that and PE funds and things to go out and, grab bargains where they can investment-wise.
Yeah, you got to shop when everything's on discount.
Yeah, and I mean, that applies to everything, right? You always, generation after generation, you hear about people who, made significant wealth during those times, whether it's property, any sector. It's really about buying at the right time and selling at the right time or holding for the right amount of time. So I don't think there's any new secret sauce in terms of those things. It's just having the I guess the understanding and then be willing to make decisions at the right time.